Let's start your investment journey.
Hi, and welcome to another edition of our weekly market outlook report for the week starting Monday, the 12th of July. The week starts with quiet economic calendar on Monday. On Tuesday, we should be on the lookout for Chinese trade balance data and US consumer price index June figures. Going forward, RBNZ interest rate decision, UK consumer price index data for June, Bank of Canada rate decision and press conference, in addition to US crude oil inventories, will be closely watched on Wednesday. On Thursday, we should be on the lookout for Australian unemployment figures, Chinese GDP Q2 figures, and retail sales for June. Also, UK unemployment and average earnings data is due, in addition to US jobless claims data. The week will finish on Friday with Bank of Japan rate decision and press conference. Also, Eurozone consumer price index data for June and US retail sales and Michigan consumer sentiment. US banks and financial firms begin reporting quarter earnings led by JP Morgan, Goldman Sachs, Citigroup, Bank of America, Wells Fargo, and BlackRock. Now, let's take a look at few markets. Let's start with the Bitcoin. Bitcoin price action appears to be consolidating sideways. This sideways consolidation has been going on for quite a long time. The price is creating the sequence of lower highs and it's supported by psychologically important 30,000 level to the downside. From the intraday point of view, the initial upside is capped by 34,870. Rally from there could potentially open the way for the retest of 37,000. Only the end of day breakout above 37,000 and a retest from above could potentially trigger oversold spike higher, targeting additional resistances at 42,600, possibly even 47,000 on the upside. Alternatively, if we see a rally into 37,000 and a rejection, or a gradual move lower and loss of 30,000, that could trigger a deeper corrective pullback, targeting additional support towards 27,000. This is NASDAQ or US Tech Index, uptrending quite nicely. The price is creating the sequence of higher lows and higher highs. On Thursday, we had a corrective pullback, but the daily candle closed above the lows, and on Friday we saw a follow through on the upside. This is currently all-time high, as close to 14,900 from the intraday point of view. So either a pullback to support at 14,700 and a rally, or a breakout above this current all-time highs could potentially open the way for a spike higher, targeting additional resistances towards 15,000. Alternatively, if we see a gradual pullback and an end of day close below 14,700, a retest of that level from underneath as a newly found resistance, that could possibly open the way for a deeper corrective pullback towards 14,600 lows from Thursday, possibly even 14,460. This is DAX, or a German 30 index, which had a corrective pullback on Thursday. Again, the price actually closed below psychologically important 50-day moving average, and then subsequently on Friday we saw this massive reversal higher. To me, this potentially looks like a sideways consolidation with a slight bearish sentiment here, because we have slight sequence of lower highs. Key trading level going forward from the intraday point of view is at 15,500, which is this area down here. So either a pullback to that level and a rally, or a breakout and an end of day close above cluster of these previous highs, in particular above 15,780, could open the way for the continuation to the upside. Alternatively, if you see a dip lower and an end of day close below 15,500, that could open the way for an additional retest of these lows towards 15,330. Euro dollar appears to be creating an oversold bounce back. In end of day time frame, we had the sequence of low and lower low, and the daily stochastic was pointing to higher lows, so therefore that was the indication of the divergence between the price and also the indicator. This oversold bounce back higher is initially capped by one spot 1930 on the upside. A rally and a breakout above that level could potentially open the way for the retest of one spot 20, which would be a falling resistance trend line and psychologically important resistance. Alternatively, if we see a rally and a rejection or a gradual move lower and a loss of these lows at one spot 18, that would negate the oversold bounce back outlook, potentially opening the way for a deeper corrective pullback and retest of additional supports at one spot 1750, one spot 17 to the downside. Sterling dollar also appears to be creating an oversold bounce back. The daily candle looks like a really big, massive bullish engulfing here. Sterling dollar also created a divergence with the price creating lower lows, and the daily, this is the 4-hourly chart, but the daily stochastic was creating a higher low, which normally indicates to a possibility of an energy buildup and a breakout, which is what we got here with the breakout of 138.50. So key trading level going forward is at 138.50. So pullbacks to that level and a rally, or a gradual move higher and a breakout above 139.40 could open the way for a gradual pullback towards one spot 40. Falling resistance trend line, and also 50% fib from these swing highs at 142 all the way down to these lows at 137.30. Additional resistance on the upside is at 140.40, which is 61.8 fib retracement as well. Alternatively, if we see a dip lower and an end of day close below 138.30, retest of that level and a gradual move lower, additional support to the downside can be found at the cluster of these previous lows at 137.50, 137.30. Dollar Japanese yen was nicely uptrending, and we are seeing a loss of support. So support, which is now going to be a newly found resistance. Key trading level going forward is at 110.50. So intraday bears are looking for a rally and a rejection at this level, potentially targeting additional supports at the cluster of these lows at 109.80, 109.50, 109, possibly even 105.50. Alternatively, if you see a rally and a breakout above 110.50 and a retest of that level from above, this would only be a fake out or a false breakout to the downside, potentially opening the way for the continuation of this clearly embedded uptrend towards 111, 111.70 to the upside. Gold, we also had a divergence here with lower lows. The same story keeps on repeating. This is all linked with the current US dollar volatility, and eventually gold broke above 1800. We had a retest of that level on several occasions. The encouraging thing for the bulls is that the daily close formed above the psychologically important 1800 support. So as long as 1800 support holds and we see a gradual move higher, in particular breakout above 1817, 1820, that could open the way for the continuation to the upside, targeting additional resistance at 1831, 1850, possibly even 1870 on the upside. Alternatively, if we see a push lower and a close below 1800, a retest of that level from underneath, that could trigger a deeper corrective sell-off towards 1790, 1780, possibly even 1760 to the downside. Lastly, let's talk about crude oil. Crude oil had a nice and bullish run towards almost 77, and then this corrective pullback, A, B, C down towards 71. The the overall trend is still up. The longer term picture for crude oil is very bullish, with many analysts are pointing to higher prices to come, some being very bullish, possibly even looking at $100 per barrel over a longer period of time. Key trading level for crude oil is at 72 to the downside. Pullback to that level and a rally or a breakout above 74.11 could open the way for a gradual move higher towards 76, 76.50, possibly even 78 on the upside. Alternatively, if we see rejection here and a gradual move lower and a loss of 72.40, that could possibly trigger a deeper corrective pullback and additional retest of 70, possibly 71, sorry, and 70 to the downside. Thank you for watching, thank you for listening, stay safe and happy trading. Bye for now.
Let's start your investment journey.